There is an earnings bomb about to go off when Amazon reports after the close on Thursday. It's not getting nearly enough attention from the mainstream financial press, and investors could be in for a real shock when they look at their portfolios on Friday morning. Now, to understand just how bad things could be, you first have to look at just how great things were during Amazon's last quarterly report. Back in February, Amazon reported a colossal earnings beat for the fourth quarter of 2021. They reported earnings of $27 a share when the market was only expecting $3. Yeah, that is a $14.3 billion profit on an expectation of a $2.5 billion profit. The following day, Amazon stock rallied 14%. It was the single largest one-day gain of market cap in stock market history. It had the financial press just absolutely gushing over Amazon, with some going as far to say that Amazon had just saved the stock market. So how could Amazon have possibly made so much money? It turns out almost all of those profits came from one source: electric vehicle maker Rivian. You see, last year Amazon cut a deal with Rivian for some future electric vehicles that they would use for the delivery business. As a result of that deal, Amazon now owns 18% of Rivian, or 158 million shares of Rivian stock. And when Rivian IPO'd in 2021, it was a textbook case of just how ridiculous the stock market had become. A company with no earnings and no commercial products for sale whatsoever was suddenly given a $66 billion valuation by the stock market. It was peak market stupidity. Well, in their defense, Rivian trucks are freaking awesome. I mean, look at this truck. You can see right through it. I don't know why, but there it is. A hole right in the side of the truck. You could wave to your friend standing on the other side. And look at this one. This truck has a bar in it. I mean, my Tacoma doesn't do that. Although maybe somebody ought to point out that putting a bar in a motor vehicle, maybe not a great idea. I just throw them out there. Look, I get it. Rivian trucks are cool. But there's one problem. Rivian doesn't make money. At the time, the market didn't care. At the time. At the end of the fourth quarter of 2021, Rivian stock was trading at $103.69 per share. That means that after an impairment charge, Amazon's 158 million shares of Rivian were worth $15.6 billion at the end of the fourth quarter of 2021. And thanks to accounting rules for marketable equities, that allowed Amazon to report almost $12 billion in profit from its investment in Rivian. So it turns out that massive earnings beat that Amazon reported in February, 82% of that profit came from Rivian stock. The problem is the market has since come to its senses, at least somewhat. At the end of the first quarter, Rivian stock had fallen from that $103 valuation back in December all the way down to just $50.24 as of March 31st. That means that in the first 3 months of this year, Amazon's Rivian stake went from $15.6 billion all the way down to $7.1 billion. So in one quarter, Amazon's Rivian investment has swung from a $12 billion gain to an $8.5 billion loss, a loss that they will have to include in their earnings report when they report on Thursday. This will be Amazon's first quarterly loss since the first quarter of 2015. And I would point out that just since March 31st, Rivian stock has dropped even further, now around $32 a share. So Amazon is still looking at a further $3 billion in losses in future quarters. So Amazon is looking at an $8.5 billion loss in their Rivian stake. Now, to put that in perspective, we need to look at Amazon's worst quarterly report in history. And for that, we go all the way back to the fourth quarter of 2000, right after the dot-com bubble burst. In that quarter, Amazon reported a loss of $545 million, or about $500 million. That was the worst quarterly loss in the history of the company. So thanks to this Rivian loss, Amazon is about to report its worst quarter in history by a factor of 10 at least. Now, Amazon stock has had a rough start of the year, but I don't think there is that much negativity priced into Amazon shares. But don't expect to see this in the headlines on Thursday. When Amazon reports, the headlines are going to report something like adjusted or non-GAAP, where they conveniently strip out the billions of dollars of losses from Rivian. Do not expect the mainstream media to report on the losses from Rivian with the same ferocity that they reported the same gains in the last quarter. But this Rivian story will highlight Amazon's long history of blowing ridiculous amounts of money on pet science projects, like phones, drone delivery, healthcare, and now electric vehicles. Stories like this happened again and again for the last 20 years with Amazon, and the market didn't care as long as Amazon was able to report big top line revenue growth. But the problem is the era of easy money is coming to an end. Interest rates are rising at an alarming rate. The Fed isn't printing anymore. Banks aren't lending as much anymore. Trillions of dollars in value has evaporated from the bond market in just the last few months. In this type of environment, investors will no longer pay obscene multiples for big revenue growth. Now investors want to see value. They want to see earnings, profits, something most of Amazon's businesses don't make. This Rivian loss could serve as a lightning rod for unwanted attention on Amazon's money-burning history and could serve as a shock for Amazon's investors. But Amazon has more than just Rivian to worry about. Labor shortages and wage pressures are driving up Amazon's cost of doing business. Their workers are unionizing. This will further compress Amazon's already razor-thin margins in their core business. In fact, if you go back and strip out Rivian from Amazon's big report in February, you'll see that their core business operating profits were actually cut in half, even though their income doubled. This time around, Amazon won't have that Rivian cushion. Also, inflation is causing people to cancel subscription services. Netflix. Looks like Amazon picked a bad time to increase membership fees for Prime by 17%. If they're not careful, they could end up with a wave of cancellations like Netflix just saw. And let's not forget about the unmitigated disaster that's unfolding in China right now. Ocean-going freight is grinding to a halt as 1/5 of the world's container ships are sitting idle at Chinese ports. That means those massive Amazon warehouses are not getting restocked as the inventory gets bought. Look for Amazon to warn about this and its impact on future earnings when they have their conference call. And lastly, most of Amazon's recent growth has come from AWS, or Amazon Web Service, which includes their cloud computing business. Now, Amazon will probably post more good numbers from AWS in this quarter, the same way Microsoft just posted some good numbers for their cloud business. The problem is that growth is starting to slow, and that is the one remaining silver lining in this whole mess of Amazon's businesses. So long story short, this Rivian investment is about to blow up in Amazon's face when they report the biggest loss in company history on Thursday afternoon. And thanks to some lousy media coverage, most investors will not see it coming. And if you want to know more about why I think the era of high-growth big tech is over and investors are now more interested in value, you can check out this video I did about Netflix's god-awful quarter that they just reported. Till next time, live small and dream big.